This is the Financially Simple Podcast, the show dedicated to destroying the complexities of money for today's small business owner. The content in the show is for informational purposes only. This show is not investment advice. Instead, seek help from a competent financial advisor or conduct your own due diligence. Justin Goodbread, CFP, is an investment advisor representative of Heritage Investors, a registered investment advisor only conducting business in states where it is properly registered or is excluded or exempted from registration requirements. Registration is not an endorsement of the firm by securities regulators and does not mean the advisor has achieved a specific level of skill or ability. Here's your host, pizza-loving, certified financial planner, Justin Goodbread.
And welcome back to the Financially Simple Podcast. We started season 2 out dealing with personal finances for business owners. And the last few episodes, maybe 10, 15 episodes now, we've been dealing with cash flow. Cash flow from a personal perspective. We've talked about how we get paid, and we've talked about where we spend our money. Today we're going to deal with how business owners can reduce their insurance expenses. I want to wrap up today's cash flow section with this segue style podcast. And next episode, we're going to start driving into risk management. We've spoken thus far about taxes as one of the major expenses that we deal with. We've talked about houses. We've talked about cars. And now we're going to deal with insurance. Look, I am not going to do episodes on how you can cut coupons. I'm not going to deal with any more budget issues. I just wanted to hit the high levels here on ways that a business owner can cut expenses at home. Insurance is a necessity of life. But many times as a business owner, I have said I am insurance poor because of the various types of insurances that I pay on a personal level. Man, and then you couple that with what we pay at work. I am just crazy about the amount of money I pay in premiums. So today I want to outline a difference, an approach that you may or may not know. It's one that I particularly subscribe to, and I can probably expect that on the social media channels, on YouTube, on Twitter, LinkedIn, wherever it's going to be, someone's going to say, Justin, I disagree with you. And that's okay. This is my podcast. If you disagree, go do it on your podcast. But actually, more importantly, go into the social media channels and tell me why you disagree with me on today's episode. I want to talk about the differences between a captive agent and an independent agent. An independent agent, I'm going to refer to today as a broker, just for clarity in today's podcast, but they're technically an independent agent, is the technical terms we use here in the U.S. But I want to deal with how you're going to reduce your cost of insurance. And in order to understand the reduction of cost in insurance, I have to deal with the way that insurance is sold. Yes, I use the S word, sold, because unfortunately, we do not wake up in the morning and say, I need to buy insurance. None of us do that. We do not think that way. So instead, insurance companies hire agents or brokers to go out and pitch, I want to say, or sell their policies or their products to you and I. So I want to deal with the clarity between the two and explain why, if you understand the distinctions here, you can actually reduce the cost of your insurance. Now, what I'm not going to do today is I'm not going to go into every different type of policy out there and talk about the ways you can cut costs on the specific policies. Nope. We're going to do that in the next few episodes. You're like, Justin, seriously? Yes, seriously. You know, we talk about mortgages because they're fun, or we're talking about buying property, but insurance is one of those things that we just have to deal with, and it's also a major line item on our budget or on our expenses of our cash flow at home. So it helps you to understand this basic information. So let's deal with the differences between a captive agent and an independent or a broker. So let's first start with a captive agent. The reason why I'm using the word captive is because this type of agent typically represents one insurance company. The largest or one of the most popular insurance companies in the United States is State Farm. State Farm. They have captive insurance agents. In other words, their insurance agents are often employees. In fact, I think State Farms are employees of the company. They're not allowed to go out and represent Allstate, which is another captive agent. They're not allowed to go out and represent other agencies. In other words, they can represent one agency. Typically, you'll see these individuals because they'll have their name, Fred Flintstone of State Farm. And so they're a captive agent. They're representing that one particular company, and they're there to sell that one particular company's products, or in their case, service sometimes. The reason an insurance agent is placed is because the company needs someone to solicit, is a term that's used, solicit their particular policies, plural, so that buyers will then go in and buy them. They are not a fiduciary. A captive insurance agent is not a fiduciary. They deal with what's called suitability. So the best example I can give you for suitability is a cup. Yeah, like the type you drink out of. So let's pull it out of this crazy world of insurance and let's deal with this term suitability versus fiduciary. The captive agent is not a fiduciary to you. They are suitable. So let's say we want a cup and you say, hey dear, let's talk about Emily. Hey Emily, I need a cup. And she's going to ask me, for what? Well, I need a cup to put some coffee in because I love coffee. She's going to say, okay. Now, my wife will ask, because I know how she thinks, she's going to say, what are you going to do? Are you going to go get on the tractor? Well, yes, I'm going to get on the tractor. Okay. That means I need to get you a cup that's going to hold the coffee at a warm temperature and that's going to have a special lid on it that you can't spill as you're bouncing around the tractor. That's what she would think about. Now, if I said, no, I'm just going to go for a long, long walk. Well, then she would get me a cup that has a lid that's not necessarily sealed, but one that as I walk, it's not going to slosh around and burn my hand. Or I'm going to say, you know what? I want a cup of coffee that I'm going to sit at the kitchen table with and just drink as I eat my grits, eggs, bacon, and toast, which I do every Saturday and Sunday mornings. I love grits, eggs, bacon, and toast. So she'll say, here's a cup of coffee, and it's maybe a porcelain or a ceramic cup that I'm really not going to be moving around much, so I don't need a lid on it. Or I may say, you know what? I just need a quick cup of coffee. We got a bunch of people over here, and she's going to say, I'm not going to do that much dishes. So she may get an insulated solo cup. So in effect, what she is asking me is, what type of cup do I need? So with that in the backdrop, if I'm dealing with a captive agent, I'm going to go to the agent. I'm going to say, I need a policy. And they're going to say, here are the policies we have to offer. So if I went to the agent, metaphorically speaking, as I'm in with this coffee cup, I would say, I need a coffee cup. And he would say, well, we have a solo cup that's insulated in nature, or we have a porcelain mug, or we have this mug over here that you can put a lid on. It doesn't seal, but you can put a lid on it. Well, what if I really needed to have a cup that I could seal? Well, the agent may not offer that type of cup. So in fact, they're ultimately providing me a suitable recommendation. They could come in and say, well, Justin, this coffee cup here has a lid on it. It can spill, so you don't want to drop it, but it will be suitable. It may meet your needs. That's what oftentimes captive agents do. You go in, you say, I need this type of policy, whether it be a life insurance, a disability, a home, an auto, a health, whatever it may be, whatever type of policies that we're going to get into as we go forward, they're going to say, okay, here is the product that our company offers. So a captive agent represents one company. Okay. Now, one of the dangers with captive agents is they may have 2 or 3 or 4 types of policies, and they don't necessarily have to offer you the most affordable policy. They can find one that's going to give them a big commission. I'm not saying they do that. That would be nefarious in nature, but I have seen certain individuals that do that. And there's always a bad egg in the bunch. There's a bad egg in every industry out there, but there's a genuine amount of good people that represent good quality companies that have good quality control in place, but they're ultimately representing one company on a suitable basis to you. Now, if you contrast that with a broker, now, again, an independent agent is the technical term that we use here in the United States, but a broker is what I'm going to call them today. A broker, unlike a captive agent, represents many insurance companies. Their job is to not basically solicit you for their specific coffee cup, their 1 or 2 coffee cups. Their job is to look at your specific needs, try to assess your needs, and then find you the best coverage for the best value. So in the brokerage platform, they're now going to listen to your desire, much like my wife did in my example, and say, well, dear, if you're going to go jump on the tractor and you're going to be bouncing around, I really need you to have a coffee cup that has a lid that you can seal and it stays locked. That way, as you bounce around the tractor, you're not going to spill hot coffee. And then when you want to pause for a second, take a sip, you can undo the lid, take a sip of coffee, and it's nice and piping hot, and then you can move on. That's the theory, or that's the idea behind the broker platform. Often the broker is there representing multiple companies, and they're trying to find the product or the company which aligns with your specific needs. So there's a slight difference between an agent and a broker.
You're listening to the Financially Simple Podcast. Show your support by subscribing to this and our other educational business channels at financiallysimple.com.
So I want to spend the latter part of this conversation then explaining when you may want to use an agent and when you may want to use a broker. So the first thing we have to understand is that there's a policy fee difference. Sometimes captive agencies can have a lower policy fee or service fee. Sometimes they can. Sometimes brokers would have a higher policy fee or a higher service fee. Their ultimate decision, the way many of us buy insurance, is based on price. We want to go in and buy a policy that provides us the coverage we believe we need for the price that we believe we can afford. Now, if we go to the agent, again, they're going to represent that one company. If we go to a broker, they're going to represent many companies. Whenever you're dealing with a capital market system, so capitalism, which I do not personally believe is a dirty word, whenever you're dealing with capitalism, competition often drives price. So if you're dealing with a broker platform, they're trying to compete against captive agents, sure, but they're also trying to compete against other brokerage agents. So a brokerage agent would not work for a State Farm and Allstate. They may work for a Fred Flintstone insurance agency, to which they represent 20, 30, 40 different types of companies for its various needs. So the carriers are going to vary. The carriers are going to vary as it relates between the two of them. Now, why does that matter? Well, because of risk coverage. When you're dealing with insurance, you may have a certain risk that may or may not be covered by one company or another. For example, when my wife and I built our house, we built a brand new house about 3-4 years ago now. I forget, 2014, so how many years that was. But a brand new house, and we put a black metal roof on the house. It's a screw-down style roof with some special screws that prevents them from backing out. It's all this other craziness. But nonetheless, we built a metal roof house. Now, whenever I began looking at the coverages available to insure our brand new house, I discovered that many policies out there did not cover new roofs, did not give 100% replacement value on a metal roof, which is a big deal. If something were to happen, a tornado, heaven forbid, were to touch down in our backyard and our house had been blown away like the Wizard of Oz, I really wanted somebody to be able to cover the roof on the house. So I spoke to various brokers, and they found me companies who covered that specific risk, and they identified companies that would not cover that specific risk. I then spoke to a few captive agents who offered their time to review my current situation. Believe it or not, I actually ended up going with a captive agent in my particular case. I personally, at this time, use Allstate. Now, that may change. That very well could change in the near future. But this time I use Allstate. Am I endorsing them? No, I'm not. Am I saying that they're the best? No, I'm not. Am I saying that you should choose an Allstate agent? No, I'm not. I believe there's a time and place for everything. In fact, we're actually in the process of doing an insurance review, which is what we're going to ultimately get to. But one of the cool things about it is as you deal with the difference between a captive and a broker, many times a broker is able to cover a specific risk that a captive agent isn't. So, for example, I had a client of mine who has a Doberman Pinscher, a trampoline, and a swimming pool in their yard. They were with a particular national-based captive agent, and the company chose not to continue their policy. So instead of staying with the captive agency, we found an independent agent that was actually able to provide them better insurance coverage from just a highly qualified, a highly rated company for less cost than that of the captive agent. So whenever you're dealing with insurance, understanding the difference between captive agents and independent agents and when to use those comes down oftentimes to the specialty and coverage depending on their specific products. Another interesting thing between captive agents and brokers is the way they get paid. Many captive agents are paid a salary. I personally use Farm Bureau as my health insurance provider here in Tennessee. Farm Bureau has a plan that allows individuals to group their coverage together at a group pricing. So our family of 5 has a deductible of $6,000. One of the best plans here in the area that we're in, and our insurance is like $385 a month. If I tried to go out, so that's a captive company. If I try to go out to the brokerage world on my health insurance, I've received prices from the $600 to the $1,400 for the exact same thing. One of the reasons why I was told from the pricing point, talking to the underwriter, was that many of the agents are not paid a commission. They're paid a salary. Now that gives pros and cons. Oftentimes commissioned individuals, I won't say work harder, they often provide a better service because they realize that if they do not provide the service at the price that they quoted, then you have the ability to leave and go to one of their immediate competitions. And the captive agents, they have the same process, but they're often a salary or a salary plus commission. Now, you may not have the contacts that I have. I know lots of good insurance agents in both the captive channel and the brokerage channel. One of the advantages to using a broker is that I can get many quotes from one individual. Maybe they represent 20 different companies, and they can streamline it and say, hey, Justin, this Fred Flintstone Insurance Company offers the best coverage at the best price for you. If I try to go to the various captive agents of the world, I need to actually go sit down with the Allstate agent, and I have to go sit down with the State Farm agent. I have to go sit down with the Farm Bureau agent, all these different other captive companies out there. I actually have to spend my time to go meet with each of them individually. So oftentimes business owners will work with brokers. When you get to the knowledge level between a broker and a captive agent has a lot of knowledge about their specific products and I'm going to call it the appetite, the demeanor, the need, the underwriting criteria of their particular portfolio. Oftentimes, insurance companies will have too much concentration in one area. So, for example, a couple of years ago, we had a huge hailstorm that came through East Tennessee and Knoxville. I mean, it did unbelievable amount of damage on houses. Strong enough so that many roofs had to be replaced. Sidings. The hail was so strong it went through the vinyl siding on many of the tract-style homes. Cars ruined. Just unbelievable amount of damage. It was amazing, actually, to really look at it. And there was two companies, I'm not going to name their names, had a significant amount of hold or market share of our particular market. The companies during that hailstorm had a little bit more losses than they anticipated in a concentrated area. So therefore, when I was talking with the agents of these companies, they just said, basically, our companies are not interested in underwriting this particular niche. They don't want vinyl siding anymore. They only want masonry siding at this particular point. They're not ready for asphalt style roofs. They want to do wooden roofs or metal roofs because they were trying to build a portfolio out. A broker, on the other hand, who may not deal with a particular company's appetite, they have a good knowledge of multiple carriers' products and how they fit your specific situation. So oftentimes a broker may be the best position. Many times a captive agent may be the best position. And finally, as we're comparing the two, captive agents often have to meet quotas, sales quotas listed by their provider. So I mentioned that I use Allstate. My agent is a very dear friend of mine. I trust him. I know him. He says, Justin, I have to sell this many life insurances per year. He has a quota he has to sell in order to keep his contract in place or in order to get certain bonuses. The broker doesn't have the same quota, but they may have a very interesting reward. You have to be careful with the broker because they may be one sale away from a big trip offered by one of their companies. I actually have a broker friend of mine who told me one time, Justin, I need to sell this one more company. I get 10 more thousand this company's underwriting, and then I qualify for an out-of-country trip because I've done really well placing business with this one provider. So if you understand the way that they're paid and the responsibilities behind, you understand when to use certain ones. So let's bullet down here. When are you going to use a captive insurance agent? If you're a business owner who has time to shop, you actually have time to go out and talk to various people, use a captive agent. Maybe you want to go out and find one agency who offers a better product or a better service suite than what you are dealing with. Another time you want to use a captive agent is when you're trying to avoid certain fees like brokerage fees, because captive agents aren't often allowed to charge brokerage fees. Captive agents could have a lower price as you shop them. If you're interested in a particular company's product, so for example, I really wanted a full value roof replacement on my metal roof. There was not many brokerage style agents who could provide that for me. So I ended up finding on the captive front. I wanted a particular need to cover at that point. Or if you're trying to look for a discount, oftentimes if you can bundle multiple policies with one particular company, you can get a discount. One of the things I see many times, I won't say many times, but more often than not, is I'll see individuals who are business owners that have their car insurance at one location, their house insurance at another, umbrella policy somewhere else, a rental property somewhere else. And if you can buckle these together or couple these together, sometimes you can get multi-policy discounts. And many captive agents can do that. When do we use an insurance broker? Well, you're going to use an insurance broker if you want to save money, because many times brokers have the ability to find a lower price at a lower value, and they can strip things away. A captive agent may not be able to make the same adjustments. So if you want to try to save some money, many times a business broker will help you on that. If you want to save time, you don't want to fill out the stupid applications that they all want you to do, you can give the independent agent the information one time, and then they can shop it with multiple carriers. You may not want to pay fees. So some captive agents may have fees that their policy owners are required, just like the brokerage platform. You may be able to get to the independent channel and find a policy or a provider that has lower costs, lower fees. Or if you have a complicated risk, if you have a risk that's going to need some specialized underwriting, then a broker may come into play. We're going to talk more about the individual policies, but in my business, I have to use a broker because the captive agents can't cover certain risk. In my home right now, I'm using a captive agent. That will probably change at some point in the future. So I wanted to give you this way to save dollars in this aspect, boil it down to one thing. You know, Lending Tree had a saying a couple of years ago that if banks compete, you win. That was their slogan for a while. I don't think it's the slogan now, but it was a slogan for a while. The same thing works with your business. If you allow brokers or if you allow companies to compete, you win. But oftentimes we business owners are super, super, super busy and we just don't have time to deal with it. And if that's you, go for a broker. Find a broker who can place a policy at multiple different companies to find you the best price for the best product, for the best service. So from this point forward, we're going to start dealing with risk management. We've been talking about insurance today, and we're going to talk about insurances in detail because insurances are one of the major components of risk management. We're also going to start diving into legal. So join us on the next episode of the Financially Simple podcast, where we start dealing with risk management and how we can protect our families. Look, I know life is hard, I know life is good, and life can be frustrating. Money doesn't have to be. Let's continue to make our lives at least financially simple. Hey, y'all go out and make it a great day.
You've been listening to the Financially Simple podcast. For more business and personal financial help and information, head over to financiallysimple.com today.